Hello everyone, today we're going to be talking about fiscal policy, and fiscal policy is the things that the President and the Congress can do to affect aggregate demand in an economy. There are a couple of tools of fiscal policy. There's government spending as well as taxation. And today we're going to be focusing a little bit more on the taxation side. We're going to talk about different types of taxes and the government's sources of tax revenue. So we're going to read page 348 to page 354, and we're going to go ahead and answer these two questions. So the first thing I want to talk about is the three types of taxes, and you can see those on page 349. Now there are three different types of taxes. You have proportional, you have progressive, and you have regressive. And they are different in terms of their tax rate, the percentage of a person's income that goes towards taxes. So let's start off by talking about proportional taxes. These are also called flat rate taxes. And with a proportional tax, basically what happens is no matter what your income, you are going to be taxed the same percentage. Okay, so a proportional tax, looking on page 349, a proportional tax takes the same percentage of income from individuals of all income levels. So whether you make a lot of money, whether you make a little money, you're going to be taxed at the same percentage of your income. That is a proportional tax. Next up, let's look at a regressive tax. And you can look at that on page 349. Okay, so that regressive tax takes a larger percentage of income from members of low income groups than from members of high income groups. Basically, the poor are taxed at a higher rate than the rich. Okay, a larger percentage of their income is going to be taxed for the poor than the rich in a regressive tax. And most economists are not in favor of regressive taxes. The next up, we have a progressive tax. And a progressive tax takes a larger percentage of income from high-income people than low-income people. So the rich are taxed at a higher percentage of their income than the poor. The income tax, for example, in the United States is a good example of a progressive tax, where the rich are taxed at a higher percentage of their income than the poor. All right. One thing I do want to point out, and some economists do make a point regarding proportional taxes, how in some ways they are actually regressive, in the sense that, let's say you have somebody that makes $1 million a year and somebody that makes $500 a year. And let's say they're paying, a good example of proportional tax might be the sales tax. So let's say they both bought something and they're paying $5 worth of taxes. Okay, that $5 is a much larger percentage of the poor person's income than the rich person's income. So therefore, that tax, even though it's proportional, both the rich person and the poor person are paying the same percentage, is more highly impacting the poor person than the rich person. So you do see some economists talking about how proportional taxes are actually not good taxes. They, in some ways, they almost act as a regressive tax. All right, so now let's move on to number 2, the 5 largest sources of tax revenue, and are these taxes regressive, progressive, or proportional? So the first one is individual income taxes. These are paid by individuals. They are a progressive tax. As you earn more, you're going to be paying more in tax, ranges between 10 and 35% of your income. You have corporate income taxes. Corporations pay taxes too. It's also progressive, ranges somewhere between 15 and 38% of income. However, corporations have lots of accountants and can get tax breaks and so forth, so they often don't end up paying as large a percentage as they're technically supposed to. Then finally you have Social Security taxes. Those are also called FICA taxes. Now those are going to be proportional up to $110,000, and it's going to be split by being paid by the employer and the employee, and those are to pay for Social Security, which provides income for the elderly. And then you have property taxes. Okay, now property taxes is basically a tax on owning property. They vary by state, and oftentimes they're in proportion to the value of the property. They're not really based on income, so you would probably call them proportional, just because they are based on the value of they're proportional to the value of the property. And then finally you have the sales tax. The sales tax ranges between like 7 and 9%, somewhere around there. Most economists consider it regressive. Even though the poor pay the same percentage as the rich, they are going to be paying a larger percentage of their income, and that goes back to the example I was talking about with number 1. All right, so go ahead and take down those descriptions for those 5 sources of tax revenue, and I will see you tomorrow. Have a good one. Bye-bye.